This is Broke Money Hustle. And now, here's Broke Money Hustle with Trico and Eric.
Hello, everyone. This is Broke Money Hustle, the podcast about financing for regular guys who have no idea what they're doing. I'm joined by my co-host who abandoned me last week. Trico, how you doing, man?
Doing a lot better this week.
Well, it's great to have you back. I did fly solo and kind of got on my soapbox, so I'm glad you're back with us to help rein me in and take over the talking while my voice recovers briefly in between segments. So how did the market treat you this week?
This week was kind of rough. Last week I think I was over what my regular principal investment was. This week I'm under, which is never good. I'm just kind of looking at different stocks, seeing how they're doing. It seems like my stocks that involve food are doing pretty good. Coca-Cola is doing good. General Mills is doing good. Utilities like Edison Consolidated, they're doing good. Seems like anyways. But yeah, everything else is not doing too well. So I think people are just kind of staying home, running the electric and and eating snacks. Yeah.
Yeah, I know. I took a really long, hard look at my portfolios, both on Weevil and on Robinhood, and I just did some cleaning up. I decided the money where it's parked, it's not doing what I want it to do, and I had to really kind of decide what I wanted to do. I want that spontaneous growth, but I gotta preserve wealth, and so I sold off a lot of my more volatile stocks, especially in the Robinhood account, which has been lingering to barely, make a profit. My Weevil account's doing great, but that's mostly anchored because of Square.
Mm-hmm.
Square stock is doing really well, and it's been doing really well for a long time. So that account is up a good amount, but the Robinhood's been languishing, and I've had all these boat anchors holding it down. I still have a few in there. Looking at you, genius.
Oh yeah.
Boat anchor of all. But most of what I got rid of was the biotech firms, the small penny stock biotech firms that really, it's like, I'll take the few dollars of loss because I want to put the money somewhere else. And I moved more of my money into my mining stocks and bolstered that. And so I kind of pared things down a little bit. I don't mean to single out Genius, but I also want to single out Express Spa. XSPA, they need to start making some money too. I don't have a lot of shares in them, but it's another one of those things that I hate seeing it in my books.
Yeah, I know that feeling. Well, you've seen on Twitter, I get pretty hard on Genius on Twitter. I keep hoping. Mm-hmm.
It's nice to have something to kick around.
Yeah. Exactly.
We started this show with a genius mistake. The best title ever for a podcast about a stock, and
exactly,
it's still our most listened to show according to the numbers. And by the way,
oh, nice.
I want to thank everybody who is listening to us on Spotify, on Apple Podcasts, Google Podcasts, wherever you get your podcasts. We're on all major platforms at this point. And to those of you who are intrepid listeners around the world on the IndieVolt network, we really thank you for tuning in and listening to us chat about making money. Taking the broke money we have, and by broke money, we're talking about, I got $20. What am I going to do with it? It's the idea of two blue-collar guys trying to change their paradigm, do a shift, and start doing rich people stuff, and let's pay yourself first. Own assets, not crap, and things that are going to appreciate in value, not just become a burden on you. And,
exactly.
Doing things that are wise with your money. I haven't gotten through all of my notes yet, but I did take part in a seminar held by Mark Moss over the weekend. And he's got this 4 Pillars program. Sounds like a great program. A little pricey for me to get into right now. But he basically gave an hour-long presentation on the cheat sheet for the notes. And it breaks down into a 2-lever, 4-asset class system The two levers being inflation and economic growth, which we only have inflation right now with this crazy market. And you have your money in 4 asset classes. These classes were growth, which would be stocks, income, which would be your various side hustles or cash flow, cash, which is the amount of cash you're holding on hands, and then you have chaos insurance, which is basically gold, silver, Bitcoin, that type of thing. And he said, based on what the two levers do, whether you're going into inflation or going into an economic growth cycle, that's how you move your money around those 4 asset classes. And kind of just based on that, where we are now, we're obviously in an inflation cycle. And the inflation is hidden. It's not that, we do notice that prices are going up because our value of our dollar is going down. Gold has not actually increased in value. Gold has a set value, and the amount of US dollars depends on how bad the dollar is doing. The dollar is tanking. I think during his presentation, he said the dollar had lost another 10% within the last few months. That's pretty incredible.
Yeah.
So based on that, then it's looking like most of my money is going into my chaos insurance, gold, silver, Bitcoin, and that includes the mining stocks. So, but there is a stock that at the end of this month seems like it's going to be a good entryway, and that is Apple. And Apple is doing a stock split. Now, Apple's what I would consider a new blue chip company. It's never going to go away. They're not going to go bankrupt and suddenly not be making Apple computers. In fact, for a short time, with its stock rallying, it became the largest company on the planet for a brief period. I think some Saudi oil company is the one that is the largest company on the planet in terms of its economic value, but Apple just briefly overshadowed them. So it's going to be around a long time. This is their 5th stock split that they've done since they became a public traded company. The last one, and I'm looking at an article here from Business Insider, which kind of goes over it a little bit. The last one that they did was a 7-to-1 split when the share of Apple had gotten to $700 a share. Now think of that. They did a 7-to-1 split when that happened. So your one share of Apple that was $700 became 7 $100 shares. Now that's back up to 400. I think last trading we were trading at well, that's my NVIDIA Corp one. Let's see. Every time I plug in MarketWatch.com, it always defaults now to the NVIDIA one. I'm not sure why. So we bring up Apple. Yeah, now I'm trading at $427 a share. It really spiked on the news of the split. I don't know if you were watching it when it happened, but it's been a pretty meteoric rise since the announcement of the split.
Yeah. Yeah, the stock's doing pretty well.
So when in August 28th is when this next split is going to be a 4-to-1. So you're looking at, let's just say the price remains stable here about 427. I think it's going to be about 450 when the split hits. That's just a guess. But let's just say it's 420 for easy math. So that means you're going to get $105 stocks. Now, based on past performance, it's a good time to get into Apple if you can only afford to buy 1 share or 2 shares. Now, you
That's what I'm thinking.
You can buy fragment shares through eBay and through Robinhood, and I think M1 Finance does it as well. But what's going to happen? And the Meet Kevin video, did you get a chance to watch that?
The young guy, the Meet Kevin guy. Yeah. He's a young guy at first. I'm like, wait, this guy is even gone through puberty yet. But then you listen to him and you're like, oh, this guy's really, really smart. He has a drive. He kind of, oh man, he's like how I wish I was straight out of high school. Like, he hit the ground running. He built an empire. I'm like, oh man, this guy has his stuff together. Like everything we're trying to do now, he did pretty much as soon as he graduated.
Yeah, you know what, and there's no shame in looking up to people who are younger than you just because they're successful.
Yeah. Yeah, yeah.
And there's no shame in starting late. It's just the fact that you started good.
Yeah.
Heaven forbid you keep making the same mistakes until you die.
Oh, exactly. Yeah, because at first I'm like, oh, he's a young guy. What does he know? And then I was listening to him, like, wow. I ended up just keeping it on. You know how YouTube will play like his next video if you leave it on sometimes? Yeah, I started doing that, and some of the videos kind of go into his story. He started with one house, and he would do all the work on it himself and bought like IKEA, kitchen cabinets and stuff to, invest in a house. And he was like a realtor, so he kind of built that up and everything, and it's just a really cool guy, and I really like listening to his videos.
Yeah, no, and he does everything well. Even his production values on his video are probably some of the best I've seen. I love his color scheme. He's got this Joker purple and green going on all the time.
Yeah.
So it's pretty cool. And yeah, he does have a lot of good successes. But his point in the video was that this is a PR move more than anything on Apple's part. And the way he breaks it down is basically that Apple, Apple, everybody that owns an Apple knows it's expensive as crap.
Yeah.
And, but you're paying for a really nice, well-designed device that has a great experience. Now, I would argue that Apple's products were better under Steve Jobs. I think Tim Cook is largely, he just copies and pastes the previous success of Steve Jobs. And that's why kind of Apple has kind of faltered a little bit, is because he's not innovating like Jobs did anymore. But, how many times can you buy the same damn phone that just has a better camera for the most part? That's the big gift, is you're getting a better camera in the phone. It's not the great leap that the first generation, second generation iPhones were when they were really coming onto the market. So I think until that hits, it's still going to kind of be mediocre, but it's mediocre to Apple's standards, which is pretty good.
Mm-hmm.
Far outshines anything Microsoft ever tried to do, especially in the mobile device space. So that being said, I think I agree with his point that this is largely a PR move. It's just going to get them better acquainted with, I guess you could say, the Robinhood traders like us.
Yeah.
It's going to be a good entry point into a stock that I think just, collapse of the economy and the collapse of the dollar notwithstanding, if things were just to be able to keep going for another 4 years the way they are, and we somehow keep this ship from crashing with all this money printing as a stable company, I think you can see the $100 stock at least being on a $300 stock within 5 years. Easily. I think it grows that much easily.
That's what I'm thinking. It's a really good entry point. Like for me, I never have $400 to put into a particular stock. So I think the split will be good because I can finally buy a share or two of Apple stock. And hopefully, ideally, like you were saying, if everything doesn't completely fall apart, which right now it kind of feels like they're doing whatever they can to kind of patch the hole in the boat,
Yeah, it's like the Titanic struck an iceberg and they're putting Band-Aids everywhere they can find it.
Exactly. So hopefully, if everything doesn't just like crumble in the next couple of months, then yeah, I can buy the stock for a little over $100, somewhere around 100, buy a couple shares, and then 4 or 5 years from now, I think the stock will be up again to where it is, to where the the share I bought for $100 will be back up to 400 again.
Yeah, and even if we go through like a major currency restructuring, because one of the things right now is like everything on the market is oversold, meaning it's making money that the economy is not accounting for because it's being pumped.
Yeah.
So even if prices like normalize, like the stock market goes down because prices are normalizing because of free market principles, whatever those are anymore. Those 4 stocks, whatever the normalization is, those are going to improve in price. What I'm saying is that we might end up on a new metric to measure the performance. Like if we go to a gold-backed digital currency, for example, that has a different value than the dollar, blah, 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 blah. But whatever that economy is, this stock is going to excel in that economy. So I think it's still a good bet to buy and hold on to.
Yeah.
They get the dividends, and when they do a split, everything splits. So you're not going to magically get 4 shares of Apple that are a 20-cent dividend. You're going to get 4 shares of Apple that have a 5-cent dividend.
Yeah, yeah, that's another thing I wanted to talk about because me, uh, when I started hearing about the Apple split and everything, I looked at the dividends. The dividend yield is kind of low, and the first thing I thought was like, oh, cool, I'll have like 4 shares at, I think they're at like a 0.81% dividend or something. But you're right. I think when the split happens, the dividends will also kind of go down, so I won't be. I mean, I won't be getting, like a dollar a share, like uh, or dollar, $4 a share, like they're getting now. I'll probably get like a dollar a share, yearly from the dividends.
But
But
you got to start somewhere. I mean,
oh
I
yeah,
was looking at. I think I sent you the pic of the guy who has all that AT&T stock.
oh
He's
yeah,
getting $1 million a year in dividends alone.
that's the
Like,
way to do it.
dude, do you want to invest in a comic book company?
Yeah,
Seriously, you're gonna invest a third of your dividends alone and put the rest of us on the path to success.
yeah, yeah. It's um, yeah, because he had a lot of because it was like a third of his investments or something, right? All into one company.
Yeah, he's got like $60 million worth of AT&T stock.
Yeah, that's I mean, he's getting really good dividends off of it, but I'd be scared. That's a lot of percentage of your portfolio to put into one stock.
Yeah, now, and one of the things that brings to mind in the Mark Moss thing, he talks a little bit about his past life. He basically was less than broke after the 2008 crash. Like he was millions of dollars in the hole. He owed millions of dollars after that crash. But he was able to. That's how he came up with this idea of this two-lever, 4 asset class system to try to make money in any type of market. So
Exactly.
based on the changing market, you move your money into you allocate it into different assets. And that's where he kind of learned the system. And he was able to build his wealth back up again. He's, probably a lot bigger of a big shot than he makes himself out to be, because he makes himself out to be a pretty humble guy, and I think that's genuine.
Yeah.
But he, and if somebody can come from less than nothing, like millions of dollars in the hole, and come back, think what you and I could do, who are thousands of dollars in the hole. Let's just say you get college loan debt or something.
Yeah.
If you're willing to do the work and put the hustle in, put the hustle in the broke money hustle, you can get there. But you have to turn it into a lifestyle. And that's pretty much what he did. Is he turned learning about the market and how it works, and learning about asset classes. He turned all of this information into his lifestyle. And you do the hard work, and you're able to spend the rest of your days vacationing because you're a professional trader. That's
Oh, exactly.
I guess that's how kind of things work out. But I mean, and going back to the AT&T thing, that guy had to have worked really hard to get to where he was. But because he worked hard, made a lot of money, he put that money into assets like AT&T. They're now paying him $1 million a year in dividends alone. You don't have to work another day in your life. You do all the hard work. Like those of you, if you're listening to us, are getting right out of high school, do the hard work now while you're young and while you can do it, so that when you become our age, you don't have to work so dang hard anymore.
Yeah.
But yeah, that's enough soapbox. Anyway, there's a lot of Apple news going around. They're doing really, like I said, they're killing it in the stock market. They just removed thousands of apps from their China store. So they're doing a little bit of house cleaning too. I know we've got the president coming down on the spyware TikTok, and there's rumors that Microsoft might be bidding to buy the U.S. operations of TikTok. So I'm pretty sure outside of China, the U.S. is its biggest installer base. And for those of you who don't know what TikTok is, don't look into it. It's a worthless place to be. It's just a bunch of little short videos of people dancing around and farting on each other for the most part. a quick video thing. But the kids like it, and we want to make sure that the platform is safe. And right now, since it's mostly based in China, there's like thousands of robot TikTok accounts in China just mining that software for for your data and whatever nefarious purposes communists want to do with that data. But yeah, that's like one of the few of many different Apple stories in the news, and I think they're going to be I think they're going to be a bigger and better company as time comes on. I know there is another rumor that I was looking around through Money Twitter and saw that there is some EV vehicle connections with Apple, possibly as well. They're eyeing a specific maker's EV vehicle. So who knows? Just like with NVIDIA getting into the possible computing space, they're looking to buy ARM technology to make their own chips. So NVIDIA would then automatically be in the CPU market if that rumored sale goes through. So they're making big changes there. They're in the EV market. Looks like Apple's doing the same thing. So I think bottom line, and to finish up this segment, I think for me, Apple is definitely a buy after the split. I think I'm going to try to buy it before the split just to get the 4 shares. But I know owning those 4 shares, they're not going to stay there at 120 or whatever they end up being split at. That's going to automatically start going back up again.
Yeah, that's true. I didn't think of it like that. Anyone that owns a fractional share, like if you own, I don't know, like a tenth of a share right now as a fractional share, once they do the split, you're going to own, when you own 4, like 4 quarter, or yeah, if you own 0.10, then you would own 0.025, like 4 shares of that, right? Instead of a tenth of a share.
Yeah, that's the way the math's probably going to work itself out. So I would say if you're a Robinhooder and you've got some fractional shares, I would sell that just because you're selling on the high end.
Yeah.
Then use that money to buy an entire share once the split happens. Wherever you're, so take advantage of the $425 price tag or $435 on Monday, and just go ahead and sell that so that you've got the extra money. That way you can buy a whole share once the split happens more easily. Like I said, for myself, I'm going to see over the weekend if I can arrange the funds before the split happens, and then I'm going to keep watching Apple like a hawk. And if there's a dip, I'm definitely going to buy it to end up with the 4 shares after the split, and make that my primary investment for Apple. So anyway, that's my plan. Don't do my plan because I'm not a financial advisor. Neither is Trico. But Trico has a term for us today, don't you?
Yeah, so I've been messing around a lot with in Robinhood, because I don't do a lot of day trading, but things have been kind of up and down a lot lately. So I've been putting in a lot of different like stop orders and limit orders and stop limit orders. So if I have a stock I'm trying to get rid of, where I'm like, okay, once it gets back up to a little bit above what I paid for it, I want to sell it before it drops back down again. And then there's other stocks where I'm like, hey, I've been wanting to get the stock for a while, but it's a little $1 or $2 more than what I feel I should pay for it. So I'll put a limit order. So I've been kind of playing around with that on Robinhood a lot. So like for example, a stop limit order kind of combines the features of a stop order and a limit order. So when the stock hits a stop price that you set, it triggers a limit order. So in Robinhood, you can kind of set a lot of these. I've been doing a lot of limit orders where it'll be sold. You can either do like a sell limit order or a buy limit order where, like, let's say you want to buy it. Let's say it's a stock that's $40. And you look at it and, like last week, a couple weeks ago, it was $38, but right now it's 40. So you're like, oh man, I want to get it at 38 because I believe that's closer to what, I feel comfortable paying for the stock. So you can put a like a buy limit order, or even like a buy stop order, where once it gets down to $38, Robinhood will buy it. Or if you have a stock, let's just say like Genius, Genius Brands, where you really want to get rid of it, but you were like me and you bought in when it was like 782 a share. You can put in a sell limit order or a sell stop order, so that when it gets back up to 782 a share, it'll sell it for you. So I've been doing that a lot, just so I don't have to kind of sit and watch my stocks to know when to sell or buy. The only catches in Robinhood, let's say for the stock that's $38 that you want to buy, and you put in a either a buy limit order or a buy stop order to buy it at 38. If you have $40 available in your account, it puts that $38 on hold, basically, so you can't do anything with it until you cancel the order.
Right.
Yep.
Yeah. Webull works the same way. I tried it once with Webull. I think it was the ag stock. I managed to buy that one lower than I wanted because I did a stop limit order on that for a few cents less than it was trading, and waited on it. And pretty soon, by the time I was eating breakfast, ding, the order was filled for blah 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 blah. Then I proceeded to go down 5 cents after that. But at least I didn't buy it at the absolute highest price. So
exactly.
I mean, for Apple, I could set a stop limit order of say I want to try to get this stock for 400 or under. So I could set it for $399, and up until, as long as I got my money parked there, it's there. It can't be used for anything else but buying the Apple stock. And I have that open order. If there's a dip, it'll trigger the purchase or the sale. Correct?
Yeah.
Awesome.
Yeah. So that's a good example. Like the Apple stock, you could put a like a limit order or stop order in there for, if Apple gets down to 100 a share or 105 a share or something like that, then after the split happens, it would trigger it. There's also, you have to put in, you can do it just for the day, or you can do it, kind of more indefinitely. If you do it for the day, it's no problem. If it doesn't happen that day, then it just kind of cancels at the end of the day, and the funds are available again. They're not like on hold anymore. But I did some of mine indefinitely, and then I ended up canceling it because I'm like, it's getting close. I don't think it'll get there, so I canceled it and bought it anyways, or sold it anyways.
And then I got the price.
Yeah, yeah, and then it either went up or down, depending on if I bought or sold it. But I did that this week with New York Mortgage Trust. I had a share of them I bought back in June. Kind of, I don't want to say overpaid for it, but I paid more than what it's going for now. I bought it at like $350. It's an alright little stock. It seems like it's always in the red since I bought it, but that's kind of normal whenever I buy anything. And,
you should buy when it's red. You shouldn't buy when it's green.
Yeah, exactly. Get my colors mixed up, even when I'm driving. But yeah, it paid a dividend. Nothing crazy, but a quarter dividend. It was like a nickel. And I'm like, that's not bad for like a little, almost like a penny stock, basically, So, and lately, of course, everything's down. So I put a buy order when it got down to 260 to go ahead and buy 4 more shares. So it did it. I didn't have to do anything. Robinhood just, put the order through, bought it. And as soon as I bought it, I think it dropped down like 5 cents after that. But so now, next quarter I'll get 25 cents in dividends from there instead of a nickel.
So is that one of your dates, or is that a Mary, or are we not doing that segment yet?
Oh, yeah, I can roll into the date, Mary, kill if you want.
Sure.
All right, cool. So date this week was Ford, not Ford the automobile company, but the symbol Ford, FORD, stands for Forward Industries. It was a nice little stock. I bought it back in May when I first started kind of getting into stocks. It was like $1.06 a share. Ironically, like when I was searching in Robinhood, I typed in Ford, and this came up, and I'm like, it was like $1.06. I bought it. I had it for the last 2 months now, almost 3 months. It was never in the red. It was always in the green, but there wasn't like a lot of growth. I was just happy that I had one stock I could always depend on to not lose money, and but there's no dividends for it naturally because it's like a dollar stock. I started looking at some of the history of it. There was in the last 5 years, there was only 2 times where it really went up. I think 2018 it shot up to like $2 or $3, and then there was another little ripple after that where it went up to $2, but it never really, has a lot of growth to it. So it was one of those things where it's not a bad stock, but I'm like, yeah, it's not really gonna grow a whole lot. It kind of maintains, between $1.50. Once in a while it might shoot up. I could have held on to it to see if it shot up to $3 again, but I was just kind of like, yeah, I was going through my portfolio, kind of cleaning up anything that's not giving me back a good dividend or a good growth. And this one just didn't make the cut. It was kind of one of those situations you ever, when we were younger and dating, like where you go out with a girl a couple of times. It's not a bad date, but there's no spark or nothing there.
Right, yeah. This person is cardboard.
Yeah. It was kind of one of those situations where, it's not a bad date, it was a nice dinner or whatever, but there wasn't any chemistry. So that one I sold. So that was kind of a long-term date. We were just kind of seeing where it was going. And then for Mary, I bought NFG. This is one of there's 30 stocks that are dividend kings that have, had been giving out dividends consecutively for forever since the dawn of time.
National Fuel Gas Company?
Yeah. Yep. And so this is part of my dividend king strategy that I started recently where I'm treating some of the dividend kings as kind of like Pokemon, where I just want to catch one of each of them. Like I want to have,
Okay. Now, what are the dividend kings? Is this a reference to Dividend King on Twitter, or is this like a real term?
Oh, it's a real term. It's basically a dividend or stock that has had consecutive dividends, like kind of like a blue chip stock that's just always given out dividends for like the last 50 plus years. There's now 30 of them. For a while it was 29. But I don't know what the most recent one was, but they recently had to add one to it because there was another stock that had given out dividends consecutively for the last 50 years. I'm finding, companies like on my, that was another thing when I was kind of going through cleaning up my portfolio last week. I realized, I should have got a dividend last month from GM. I own like 4 shares of GM and I got nothing. And I went on dividend.com and there's like no, like they didn't declare any dividends. So that's one thing, I'm a dividend investor and I kind of forget sometimes companies can decide not to pay dividends if they don't want to. So
yeah, this whole COVID thing, we're not going to give you any money.
Yeah, exactly. Well, like AMC, I own some stocks there, and I went on their website and asked the company, I'm like, hey, are you guys paying dividends this year, this quarter? They were like, nope. So that's another stock that normally they'd be paying a decent dividend, but yeah, not currently. So yeah, NFG, they're a dividend king. They've paid out dividends for 50 plus years. so I felt pretty comfortable getting them, and that's kind of my new thing. Is I want to one of the goals I have for myself is to get one share of each of the 30 dividend king stocks, and then after that start on the dividend aristocrats, which is like 25 consecutive years of dividends. Then I'll start buying some of those guys, and then after that I might look at it, see which one's performing the best, and then kind of buy more shares of one of them. But yeah, so that was part of my thing this week, was to buy some NFG to kind of get closer to that goal of mine that I set for myself. Bought it at 40.78, so I paid about a quarter more than what it's going for now. But it'll probably go up because right now everything's down anyways. So, if the market kind of gets back to normal, it'll probably go up a few dollars. But it's one of those I'm just buying and kind of holding on to for a long time because
seems like a safe place to park your money.
Oh yeah. Like utility companies, even no matter what happens in the economy, the utility companies are, something we need.
Yeah.
Utilities and food, they're pretty safe, no matter what happens. And then for my kill, I finally killed off ENSV.
I did too.
You did too? Awesome. It was kind of flirting with us. There was a couple times in the last week or two where I bought it for 23.5 cents a share, but I wasn't in it for a ton. It was like 10 shares, but the last couple weeks I was kind of flirting, like it would go up to 22 cents and I'd be watching it like a hawk to see if it got up to what I paid so I could unload it, and then it would drop back down to like 19 or 16 cents or something ridiculous, and then it would go up to 21.5 cents, and that's when I started really playing with the stop limits and the limit orders and all that kind of stuff, because I got tired of watching the stock to see if it was gonna go up so I could drop or unload it, so it finally, I think it got up to 21 cents or something like that. I lost 2 cents a share, but I finally unloaded it. I got tired of seeing it on my portfolio. And my wife, it's funny, because I'm like, if I lose 20 cents a share, it's in my mind as bad as losing like $20 or $200.
Right, yeah.
So she's like, well, how much did you lose? Because the way I was acting about it, she thought I had like 1,000 shares or a couple thousand shares. I'm like, I lost like 20 or 30 cents on this deal, so it's but I think that's kind of just my mentality, is I really hate losing money at all, whether it's 20 cents.
When you sell it, you make 20 or 30 cents per share. You're like, oh man, I'm king of the world.
Exactly. So but yeah, I finally sold that. I just I was like, I'm just gonna sell it, take the 20 or 30 cent loss. I can probably dig around on the couch, find 20 or 30 cents and break even.
You're outside begging for change. Like, what do you need change for? I lost 20 cents on the stock. You get 20 cents.
Yeah, I know, right?
Yeah, well, I mean, this is my kill too, because it was definitely a dog show, not a pony show, and happy to see it go. It's one of those things. It's like, as I'm trying to mature as an investor, you really have to decide what kind of investor you are, what your situation is. Like taking yourself for example, you've decided that you are a dividend trader, a dividend investor. So you're not trading, you're investing.
Yeah.
Whereas somebody who's a trader, it's like day trading. Hold it for a week, look for it to pop, sell it. That's like a trading. And then so you're a dividend investor. For myself, it's like I'm still kind of like seesawing between, because I really like tech and I really like this emerging market stuff. So I really want to like get on the ground floor and ride to the moon on some of these things. But it's not exactly the most realistic thing, especially for the position I'm in. For the money I do have is money I want to keep. So I don't want to go in for those really super high risks. It's more or less I'm looking for like the moderate risks. Like right now I'm dating Nicola, you know. And I think
Yeah.
I roped you into that too because I thought it hit its bottom. It was near its IPO, but then it lost another $5, so it's down to $30 a share right now.
It was like clockwork. As soon as I bought a share, it dropped $5.
So I mean, so Nicola is my date. It's one of those things. It's like, man, I should just put the $30 in AT&T because I thought I got I'd be getting a full dollar dividend from them. But no. So because I do believe in the EV market, I think EV market is one of those things that's going to weather whatever the storm is because it's just like we've reached a point in society. Because I pushed against electric vehicles for the longest time, but we've reached a point in society where enough private businesses are making the technology actually work.
Hmm.
Um, that the shift is like there's a cultural shift to where it's going to be. Well, yeah, that's just exactly what it's going to be. So even though gas is, it's questionable whether or not it's better for the environment to go EV. Because again, if you look at a picture of a cobalt mine and you put that up next to a picture of a pipe sticking out of the ground with trees around it, or a fracking mine, yeah, there's a big difference between those two pictures. But
Yeah.
anyway, cultural sentiment, feel good about EV, whatever that kind of BS crap. It's a technology that's finally coming into its own to where it's actually manageable. And I think this month is battery day at some point for Tesla. And that's going to be probably another groundbreaking achievement because he's been building a battery day for a long time. So I think we're going to learn a lot of new things about how this technology works. And it's not just for the EV market. Tesla's been working on a model for your home where you have a backup battery system mounted on your garage wall for when the power goes out at home. They also have a shingle. I think Tesla's working on shingles, or maybe it's another company where it's a solar shingles that then would feed in and charge up a battery. So there's there's like my buddy who works for Power Home Solar. They're doing stuff like this too, where they have a battery hooked up to it for part of your. You can get it installed in your home with a battery, so that the shingles or the panels, not shingles, they're panels, but they charge the battery, and then your house runs off the battery if your main line goes down. So that's the way the market's going. So I'm still like my danger zone is EV for the most part, but everything else is like I need mining stocks, I need blue chips, I need food, gas, those types of things. That's kind of where I'm parking my money.
Cool. Sounds like a good bet to me.
Yeah, and I think for a Mary stock for me is AT&T. After because AT&T is one of those things. It's like Apple. It's never going to go away.
Mm-hmm.
It's a good dividend thing. So I think I want to start like amassing shares of AT&T. So I think that's going to be one of my next short-term goals is to whenever I get an extra $30 or whatever AT&T's valued at, park it in there and give me another 59-cent dividend.
Yeah. Oh, exactly.
Cool. Well, excellent picks. And I just want to remind everybody listening to us, these are good picks. I like what he's doing here, but don't trust us. We're not investment advisors. Please seek out a financial advisor if you've got a bunch of money you don't know what to do with. Do your own research. Educate yourselves. We're just trying to bring what we know down to a level where we can all understand it and figure things out together.
Oh, exactly. And if you have any good picks or any good stocks that you want us to know about, feel free to DM us on social media. Because that if it's a good stock or something, we might look at it and talk about it on the show.
Yeah, absolutely. I mean, we'd like to have you as a guest as well. We do vet our guests, so if you want to reach out through @BrokeMoney on Twitter or Broke Money Hustle on Instagram through the DMs or even our Facebook page, Broke Money Hustle, and you say, hey, look, I do a side hustle. I'd love to have somebody on that does Lyft. I'd like to have somebody on that does Shipt.
Yeah.
Or, if you even did your own side hustle, like you make Adirondack chairs out of your garage or something,
Mm-hmm.
We want to talk about all these different ideas, as many ideas as possible, because that's really the only way you get ahead in this. So if you're someone like that, please reach through us through our DMs, and we'll of course look at your profile and kind of vet you a little bit, and then be happy to have you on the show like we did our previous guest, who a young man from Georgia. Man, he was look him up at what was his Twitter handle? It was like ROI something.
Yeah, it was something like that. He was a really cool guy. I started following him on Twitter, and then right after that, my phone broke, and I haven't been on Twitter. But
Yeah. It's why it's and it's hopefully you'll get back in the races again, because gotta stay on top of these things. But he's Wealth Builder, and his handle is at increase_ROI. So,
yeah,
give him a follow, please, and follow us at Broke Money on Twitter, and slide into our DMs so we can have you on the show, possibly, or just tell us what you're looking at. I had one guy on Twitter mention Great Panther Mining. So far, that's been a winner for me. I added that to my Weevil account. Another good mining stock, and so cool. We love it. And please, if you can, watch us live on YouTube and Facebook. We'd love to have you roll into the comments and ask some questions there too, as we continue this little trail of trying to create, not the best podcast, but at least one that serves people coming from our own worldview, points of view. We're tired of being broke all the time. I grew up rolling pennies to go to the grocery store to buy cheap meat just to have some for the week. So try to break out of that lifestyle, and we'd love to hear from you. All right, cool. TJ, you got anything more for today?
No, that's pretty much it. Hopefully the stock market kind of bounces back a little next week. It's looking a little low for my liking. But yeah, hopefully that bounces back. And we speaking of side hustles and stuff, we tried ordering stuff from Shipt. So I kind of got to experience it as a customer. But anyone that does Shipt, please write to the show. Let's have you on, because I'm really kind of curious how it is from their end. Because you can put tips in there and everything, and there's like a fee for using the service. So I'm really kind of wondering on the opposite end, how much of that cut of the money the company takes, and how much does the Shipt person get. Anyone that does that, kind of let us know, and Grubhub, all that kind of stuff, because we tried Grubhub recently too, and it didn't work out so well. The guy that was supposed to pick it up canceled, and then another guy couldn't pick up the food for 2 hours. And I'm like, it's half a mile from my house. I'll go over there myself. So I almost
But let me tell you guys that are listening right now, that situation is not unique to Trico's area. There's a lot of people who, because of things going on in the world, they're just not actively doing this thing because they want to minimize their human contact. Well, that's an opportunity. Like one of our previous guests, Ryan, he says he takes every DoorDash job available. And because of that, he became a top DoorDasher, and he gets preferential treatment with DoorDash, so he gets the big money ones. He gets first pick. So if that's the hustle part. Sitting back and saying, what? And I get it. If you have a compromised immune system, maybe you should minimize contact with people. But if you're young, otherwise healthy, you stay safe. There's no reason why you can't jump on opportunities that other people are giving up.
Exactly. Because the fact that the next person couldn't pick it up for 2 hours, I'm like, oh, there must be a shortage in this area. Someone could probably make bank, if they were.
Absolutely.
Yeah.
Cool.
I almost opened an account.
Send your order from Shipt. See if the delivery person wants to come on the air with us.
Yeah, I'll run out there, flag them down.
We're not looking for superstars. We're looking for real world people who are doing this on their own, trying, making the hustle, because that's what's the most inspiring. It's not like, we can get inspired by somebody like a Mark Moss, who's a multi-millionaire with all these different businesses and went broke and come back again. Dave Ramsey's been through the same thing. They've got great sage advice, but it just means more coming from somebody who is literally just like you in your situation. Never even been rich in their life, trying to build something, trying to build several somethings, and that's the stories we want to feature the most here on Broke Money Hustle.
Exactly.
See you Monday.
This is Broke Money Hustle.